Happy Saturday, everybody. I hope you all are having a great weekend. Hope you're enjoying the 4th of July with your family. June is closed, and we're going to look at what happened in June and where we go from here for the greater Nashville area. Now, we do spend the majority of our time on leading indicators, not what has happened, but what is going to happen. And then at the end of the video, I'm going to show you a house that sold in Franklin. Franklin's a great market. Houses have been going, $2 million houses have been just flying off the shelves. I'm going to show you one that just lost $300,000. Telling y'all, it can happen anywhere. You just have to be careful. Just be careful. Now, first things first, Mark Zandi, he was bullish on the economy all the way through 2022. He was like, nope, look at jobs. Jobs are good. The economy's fine. Now he's saying it's time for the Federal Reserve to cut rates. That was the message in today's job report for June. This happened yesterday, by the way, Friday. Unemployment, it's still low, but it's starting to pick up. It's starting to notch up. 3.9, 4, 4.1. It's creeping up. Okay. Wage growth, while still strong, steadily moderating. The Fed has met its full employment mandate. Inflation, this is where I think he's a little bit full of it. Harmonized inflation is firmly below target. I don't even know. I mean, this is, he sounds like Paul Krugman here, whatever his name is. Hard to justify a restrictive 5.5% Fed funds rate. Now, he is pushing the panic button, saying we're in a recession. A lot of people think if unemployment ticks up, interest rates will drop. But I will tell you, I'm just telling you, there's a lot of macro that nobody understands and nobody's really talking about, especially in the real estate industry. Perfect example of this is what's happening in Japan. Japan's currency is falling off the cliff. And one of the things they're doing, believe it or not, they have $1 trillion of US debt. They're selling that debt, they're cashing out of it, and they're buying yen to hold up the yen. Well, guess what that does? That pushes up our interest rates. So crazy enough, your mortgage rate might be impacted by what's happening in Japan. There's all kinds of stuff like that. And that's why we cannot speculate on where interest rates will go. This is a much bigger thing than just the housing market. Let's take a look at unemployment in Tennessee. Let's take off the national. It's not really helpful. Look at this. Continuing claims and unemployment hits a new, not annual high, but a 2-year high. We have to go back all the way to basically late 2021. October of 2021, we had 23. We are now touching 23,000 in claims. This is something to pay attention to. It is materially higher. And I gotta tell you, where is this in Nashville? Is this Memphis driving this up? I would really be curious where in Tennessee continuing claims are pushing up. Where is this being driven? Because I think it's a very important indicator to watch and certainly something to pay attention to. But I'll be honest with you, it doesn't feel like it's in Nashville if it is. So you guys tell me if you know, if you're seeing it, tell me. This is an interesting view right here. And I got to tell you, I think this is where the pain is. If you click on multifamily and real tracks, over 1 million, you you zoom all the way out. Okay. There's not many listings anywhere, but right here, north of 40 is where all the listings are. The vast majority of them are right here. Guys, a lot of these are Airbnbs. A lot of these are developers, and they just got on the wrong side of whatever's happening. Okay. Airbnbs in the core, notice there's not one right in here downtown. Okay. Why? Because it is crushing it down there. But you get outside of that 40-24 loop, and it becomes increasingly difficult to run an Airbnb and make it make sense. The problem with that is that means that you have to go to the next best use, which is long-term rentals or single-family homes, and they just don't get the same prices. These could get majorly repriced. We'll keep an eye on it. Now, active listings in Nashville actually up 31% this year. Okay, 31% year over year. And notice that at the end of each month, it drops pretty significantly. That happens every month. Guys, the reason this is important to pay attention to is because as active listings pick back up, it's a lot of these are expired and canceled listings that get relisted. Okay, this makes the days on market metric almost useless in real tracks. So you never hear me talking about days on market. I know some of you have asked about it before, but the reason I don't use it is because when they get relisted, they start their days on market completely over. It makes it a useless statistic, in my opinion. Nonetheless, Active listings up 31% year over year. That is huge. A lot of people want to see us go back to 2019 inventory. The problem with that is, y'all, is our contract volume or demand is down 30% from pre-COVID inventory, pre-COVID. Okay, it's down 30%. So here we finally stabilized after 2 months of being lower demand. We're finally starting to stabilize again. We're up year over year 0.7%. That just means that Nashville demand is stable from where it was last year. But that is not the case for June. I'm about to show you June. June close volume down 10% year over year. Look at this. 2442 is where we ended June. June of last year, it was 2752. Pretty wild. Now we're going to come back to price. I'm going to show you price here in just a second. Let's take a look at a few counties. Notice Williamson County up only 5% year over year, but look at how stable it's been. Williamson County has handled and managed its inventory relatively well. It's a very strong market. Look at Davidson County up 22%, and you can see it's just, man, it's been blowing up. Now, again, the end of the month, we should see in the next week or two, is it going to recover? Is it going to make a new July high? I think it will, but we certainly are starting off a little bit slower than we did last month. At least that's how it feels. Let's look at a couple others I want to look at. Is Sumner. Okay, Sumner active listings are up, but when we look at contract volume is way up for Sumner. I'll come back to some of these others. Okay, look at contract volume. Contract volume's up 20% year over year. So even though active listings are up, contract volume's up. And what I'm personally seeing is that I think people are stepping out of Wilson and stepping out of Williamson, and they're going to Rutherford and Sumner. So Rutherford and Sumner are starting to pick up in contract volume, but Sumner's up 20% year over year. That's pretty significant. Pretty significant. Okay, looking at Davidson and Williamson. Now I'm focusing on them because that's the majority of Nashville's markets in Davidson and Williamson. Rutherford, Wilson, Sumner, those are other higher volume areas. Murray can be somewhat, but Davidson being almost 40% of entire Nashville market. Pretty important one to watch. Here, contract volume down 7% year over year. That's pretty rough. Let's look at Williamson. Down 6% year over year. But notice it's stable. It's stable. It's not having that June panic buy we saw last year, but it's certainly stable. And I suspect it'll jut up and meet demand somewhere in the middle of July. It'll even out and it won't be down year over year anymore. Now let's take a look at price. Okay, price, we ended the month at 505. Now, if you follow my Substack, you will know my Substack newsletter, I posted that prices for June would be in between 490 and 505. Sure enough, it hit 505 with a close volume down 10%. 2442 is down quite a bit. Here last year, we were at 474, up $30,000 on sales price. Now, one thing to note here, because I know you hear me saying like prices are dropping. Ethan, it's up 30,000. Yeah. But here's the thing. Prices haven't really moved. And I told you this. April, 505, May, down 1%, but flat, 499, June, flat, 505. Let's take a look at this chart right here. This is what we're seeing. It's this churn. You can see it right here. Look at this leading indicator. Okay, this is price cuts inverted as a percentage of listings, active listings, and you can see it's about to massively drop. We're already starting to see it drop from 515 to 507. Now, this is a different snapshot than the one we just looked at. This is a rolling 30 days. So this is already into July. But nonetheless, you're starting to see it fall. Now, not only are you starting to see it fall, but we are actually, let me come up here. This orange line is contracts, okay? Median contract price. Notice here we're at 494 on median contracts as of today. The reason that's important is you have to go back to March to see a median contract price under 500,000. Under 500,000. So this is the first time really this goes out, this is pushed out 30 days. This is really the first time since February that the median contract price has been under $500,000. That's pretty wild. And this is my point about leading indicators. See, our leading indicators are saying prices are dropping even as For the past 3 months, I've been saying prices are stable, prices are high. Guys, that's old news. Prices are dropping. Now, I'm telling you things that are already happening. And the point is that if you go out and say, well, I'm going to wait for prices to drop back down to 480 where they were before, that's fine. And you'll get some good comps. But the fact is that this little discount line, if it pops back up, guess where prices are headed? You may have missed it. So I'm not trying to get you antsy about buying. My point is that right now prices are dropping and now it appears they're bouncing. It could be stabilizing. We really need another week to know. But if this continues back up or it just moderates, then whatever price drop you're going to see over the next 30, 60 days, it's going to kind of stabilize there. Now, this is exactly what happened in 2022. We go back to 2022 prices. We can see in May, it peaked at 500. It started to drop in June, but it was basically flat. Started to drop in July, 1%. And then August, boom, down $15,000. This is a big drop. Okay, that's kind of what we're seeing now. July is going to drop. It's just a month earlier than it was in 2022. July, it's probably going to drop about 15,000. And then in August, maybe another 10 or 15. We'll see. But then it's going to stabilize, potentially. Well, it's stabilized here August, September, October. So after you got those big drops, it wasn't like they just kept dropping. It wasn't until January that you saw prices trough at 450. And that was really the bottom where I thought that was the beginning of a price crash. That's why I stopped. I'm like, you know what? The Fed just started printing money, handing it out. You know, they called it BTFP. They're, oh, no, this is not money printing. And then everything just goes back up. And I'm like, okay, whatever. It is what it is. Prices went back up. So my point is it's very hard to predict what's going to happen outside of hard data. The hard data is suggesting we're going to drop into the 480s. Where it goes after that, I don't know. It looks like it could be stabilizing. Typically and traditionally, the fall is a much better time to buy. You get over that school zone scurry, and you could be sitting at a pretty good opportunity to buy, especially as these comps roll in. But just keep in mind, that doesn't mean, or it's not a guarantee, that prices are going to keep dropping just because our leading indicators right now are suggesting the next 30 or 60 days they're dropping. Last thing I want to show you, look at this house right here, 813 Hillsborough Road, Franklin, Tennessee, sold for $1.8 million, closed a little less than a month ago. And here's the thing, guys. It's a new construction house. It was purchased. It was not a flip. It was purchased for $2.1 million a year ago. It sat on the market, couldn't close it for a year, and now it's sold for $1.8 million. This is a beautiful house in a great location, although it is on Hillsborough Road, so it is kind of a busy road. Here you can see it's right there. That's brutal, guys. Okay, so look, in any market, it doesn't matter how hot or how great, you can lose money. And in any market, no matter how bad or how hard, you can still get better than average deals and even make money. Okay, the point of a house for most people is to find something that has somewhat of a stable value. Of course, you want prices to go up, but you're looking for a place for your family to live and exist. Here's the thing. I don't know where prices are going to go. If you buy right now, just don't be a forced seller. The best way to prevent that right now is to have a larger than average down payment or assume a mortgage. Someone once said, you make money when you buy, not when you sell. And I think that's a true statement. When you buy the house, it's how you buy that prevents all the horror stories you read on Reddit, all the horror stories you hear about on TikTok. It's how you buy your house. If you do it carefully, you prevent yourself from being a forced seller. And in the long run, whether you choose to sell it or not, it'll be your choice and it won't be something you have to do or you have to write a check for. It'll be your choice. And that, to me, is the most powerful thing that you can do going into purchasing a home. And with that, I hope you all have a great weekend, and I'll see you next Saturday.